Dear students, myself Palakrana and I will be helping you out to ace your ACCA SBL exam. In today's session, I will be covering topic of stakeholders. Guys, it's very important topic and I feel that stakeholder is something which is not only important for ACCA SBL exam, but you will be the future, maybe you will be running your own company. So if you are an future entrepreneur, you need to understand who these stakeholders are and how they can impact your business. See, stakeholders are surrounded by us and we need to prioritize them. We need to allocate our resources according to the preferences of the stakeholders. So it's must requirement for a business to understand what kind of stakeholders our business is linked with and how to prioritize them and what kind of stakeholders I should more focus on. So in this particular chapter, I will be covering topics related to stakeholders. So stay connected. So first of all, let's discuss what are stakeholders. देखो stakeholders क्या होते हैं? They can be individual, they can be group. So these are the persons who can influence or can be influenced by the activities of the organization. So that's why they could be internal, they could be external stakeholders. Taking the example of stakeholders, we have customer, we have suppliers, we have government, we have employees. So business is surrounding by various stakeholders and business need to understand which stakeholder they should focus more on because every stakeholder wants something different from the business and business need to understand which stakeholders are currently right now most important for me and I should focus more on those stakeholders because we can't focus all the stakeholders together, we can't prioritize all the stakeholders together. They all have different concern and sometimes the concerns of one stakeholder could be opposite from other one and there could be conflicting situation. So stakeholders are the individual who are interested in the activities of the business. They can influence or can be influenced by the activities of. Now, taking the example of certain stakeholders, talking about some internal stakeholders, just like directors, employees, shareholders, trade unions. These are the internal stakeholders of the organization, and they want like just director want good salary, bonus, promotion, job satisfaction, job security, career growth from the company, and employees have the same concerns from the company. But shareholders want increase in shareholders' wealth. So we knew that shareholders will get the residual after deduction of all the expenses, and employees and directors get bonus. So the more directors and employees will get, obviously shareholders will get lesser in return. So there might be a situation that their concerns are conflicting in nature. So we need to understand which stakeholders to prioritize more on at that. Now, for that purpose, we have Menlo matrix, which is also known as the stakeholder mapping model. This model guides us that which particular stakeholder we should focus more on at that time. So that depend upon the power and that depend upon the level of interest of the shareholders. So first one is about the shareholders, stakeholders, basically, who have more power and they have more level of interest, high level of interest in the company. So they are known as a key player for the company and we can't ignore these type of stakeholders. So shareholders are also the part of stakeholders. So major shareholders come under this category, but remember, you can't mug up that yes, this particular stakeholder or shareholders will come under the key players category. That depend upon business to business. Now, next is the stakeholders who are having low power as well as low level of interest in the company. So the stakeholders who don't want anything important in the company, they are just like, okay, whatever information is provided to us, they are comfortable with that. So we should prioritize them the least one, because they should be treated with the minimal effort, because that would be a waste of time and resource. Now, there are certain stakeholders who have high power, but they have low level of interest. That means we need to keep them satisfied. We need to handle them with care. Institutional investors come under this type of category. Now, next and the last one is the stakeholders who have high level of interest and they have low power. So we should keep them informed, and we should keep their consent under our confidence. Just like, and again, we can't memorize that this particular category comes under this area. But yes, there could be employees, there could be lenders. Now, keep satisfied stakeholders could be turned out into key players. So we need to focus more on them also. Reason being, because if they'll get interest in our company, they already have power. So they can become key players. So we need to prioritize this. Now, as we have discussed in previous session also, that in ACCA SBL exam right now, they don't directly test models, but you can write this model by linking with the case scenario, and you will get idea that if something is relating to the stakeholder, then definitely you will get hints that manual could be applied over here. And stakeholders have different option. They can, maybe they can switch to the competitor. Maybe they can influence. They can increase their power. So that depend upon situation to situation, and this situation will particularly depend according to the question. Now, next is reporting to the stakeholders. There are two types of disclosure requirement for our stakeholders. One is the mandatory disclosure, which is the voluntary disclosure, and that is required by law, and you have to disclose that. Now, next one is the voluntary disclosure. That means the information which is not mandatory by law, but organization provide the disclosure requirement if because they want to do so. It's not legally binding on them. That could be regarding the CSR activity, that could be regarding the integrated reporting, that could be the social and environmental footprint aspects, and organization are doing right now, because this is giving them a goodwill advantage, and we are right now more focused about the greenery and public consciousness. So most of the customers are switching towards health and safety concerns. That's why businessmen are also understanding the importance of voluntary disclosures. Now, advantages of voluntary disclosures. Guys, you don't need to write advantages, disadvantages directly. Again, there will be a case study, and linking with that case study, suppose if there is a company relating to factory, and they have a manufacturing industry, and they are having oil emission, or they are having water emission in the pools, or maybe seas. So again, they will be disclosing, and what would be the benefit if they are disclosing regarding this, regarding the CO2 emission. So you have to link with the given case scenario and try to use as much as possible the names of the person if they are given in the case study. Now, advantages. If I am voluntarily disclosing something which is not mandatory, which is not obliged, that is gonna to increase my brand image and reputation, because I am being transparent, I am being honest with the society. Next is, if I am open and I am sharing without any obligation, now shareholders and wider stakeholders will be encouraged to participate in the communication, and there will be a transparent communication on a two-way party. And yes, organization brand image will be visible to all the stakeholders, all the shareholders, and the prospective stakeholders, and they'll get to know more about the organization, and they will plan according to the brand image, and maybe they will be interested invest more in the company. And yes, again, that is going to give a competitive edge over the competitors who are not disclosing important information about the company, which is not mandatory, but maybe we have the habit, we are the human beings, that yes, if someone is disclosing us more details, then we think that these persons are correct, they don't lie. And yes, decision making will be improved. Now, next is corporate social responsibility. See, corporates have the primary responsibility to maximize the wealth of shareholder, and we knew that shareholders are the real owners of the company. So they want the return on their investment because they have trusted in the company and they have invested, and it's their right to get whatever they have invested in the company by multiplied, including the interest. So, but apart from that, corporates have the responsibility to consider what kind of impact they are creating on the social environment, what kind of impact they are creating on the environmental aspects. So, CSR means the extent to which organization recognize its responsibility for social and environmental aspects. This includes organization behavior towards employee, customer, environment, etc. So, just taking the example of corporate social responsibility, if suppose a company can choose to invest in a renewable energy sources or development of environmental friendly products, because it's a part of their CSR strategy, because they want to meet up, or they want to excel in the environmental related concerns, and they want to reduce the operational cost. But yes, again, they have to improve their brand image. So there is a difference between CSR and strategic CSR. So CSR strategy means having a formal policy which guide organization CSR activities. There is a big range of CSR activity which an organization can pursue. Hence, having a CSR strategy will help an organization to select and focus on the preferred CSR activity in a structured and planned manner. So basically, if I have the policy that yes, I want to utilize the resources considering the environment, this is my CSR strategy. But yes, whenever I am undertaking the CSR strategy, but I am aligning my CSR strategy with my organization core competencies, core strategy, and I am taking my business along with these CSR activities. This is the example of strategic CSR. So again, organization have to prepare the CSR report, and this report disclose the initiative the organization is taking to fulfill its social responsibilities, because organization have certain social responsibilities towards the other stakeholders as well. So stakeholders want to know how organization is performing, what are the environmental related activities which my organization is focusing on. So CSR report considers the initiative relating to the following, including that could be both monetary, that could be non-monetary, with respect to employees, how my organization is treating their employees, what kind of expenditure my organization is focusing on the employees' health and their safety, their concerns, again, environment, again, the society and community. So, how I am investing, how I am considering these important stakeholders, they all are part of CSR report. Now, there is a word known as the long-term sustainability, which we will be, covering after this particular slide. But yes, sustainability means that yes, we are focusing on the need of future, need of today, but we are not compromising the future needs, because it's just utilizing the resources, considering the future also. Now, next is corporate citizenship. See, corporate citizenship is an approach in which an organization includes social and environmental related aspects in its core values and principles. All the key business and decision consider the impact on social and environmental, and the business decisions are closely aligned with the social and environmental aspects. So the goal is to improve the standard of living and the quality of life community around it while maintaining the profitability of stakeholders. So that means what kind of values and what kind of principles I am including in my business area, considering the social, considering the environmental aspects. And yes, it's the responsibility of every businessman to focus on environmental as well as society, because we are taking resources from the society, and it's our duty to revert back to the society in a positive manner. So under corporate citizenship, organization has certain rights as well as responsibilities. So right could include, that means right to exist. I have the right to work in the organization. I have the right to build my business in this society and to maximize my wealth, my shareholders' wealth. But again, it's my responsibility, because if I am taking resources, I'm living in this society. So I have to meet the compliance, I have to fulfill the requirements of laws, and again, I have to consider the general public also. So there are certain principles of corporate citizenship. These includes minimize harm to the society, environment, example pollution. So again, it's my duty to take care of the mother earth, and I should not create pollution. And it's not possible for the manufacturing industry to create a zero level of pollution, zero level of emission. But yes, I should reduce as much as I can, use renewable sources. So maximize benefit to the society, like it's term we use nearby the Diwali season, that go local. Yes, we should promote our local suppliers so that they can earn also, and again the income and the national GDP of our country improves. And yes, we are accountable to the wider stakeholders, not only the immediate stakeholders. We are not only responsible for the employees, we are not only responsible for the customer, but yes, like if I am running my business in this society, I am responsible for the society, I'm responsible for the environment also. Now, and there is an old saying that yes, we should, focus on responsibility, social benefits, or there are certain persons or organizations who are opposite and who don't want to fulfill or follow these social responsibilities. So let's discuss some pros as well as cons of following the social responsibilities. See, first pros is this, that we are the social citizen and we should contribute something to the society in return, because we are taking resources from this society. And yes, society is giving us the resources, just like the educated employees, infrastructure, environment. So it's our duty to pay back something in return. And yes, we are creating pollution. So again, we are creating deforestation. We are cutting down the trees for our factories, for just taking the example of paper factory. Number of trees are cut down, so it's our responsibility to plant again few trees in some other area, just to revert back to the society. And yes, it's our responsibility to create a positive image of the company. And yes, that could be possible just by following the social responsibility, because it will be a good brand impact if we are complying with these requirements. But there are certain cons of following the social responsibility as well, because organization, it's an all saying that it's our main motto is to earn the profit. And if we are investing money in following the CSR activity, that is gonna to reduce our profit. And yes, we are not human beings, so it's not our responsibility to fulfill this requirement. We are paying tax. Certain organization have the thinking that yes, we are paying tax to the government, it's government responsibility to focus on these areas and to take care about the future. And environment. So multiple views, because it's not compulsory right now, but yes, in upcoming future, it will be obligatory for company to disclose all these requirements. Now, again, a voluntary disclosure include integrated reporting. See, under integrated reporting, we disclose six capitals of organization, and under these six heads, we disclose each and every aspects of organization in a more detailed manner. That how my organization is creating a governance area, and what are my mission, what are my objective. Again, I will be covering details about my strategy, my financial performance, which were also the part of earlier reporting requirement, financial statement requirement. But again, we follow the social and environmental context area, and we provide information about the social and environmental aspects also. So again, under integrated reporting, we get the idea about how organization create value in short, medium, and long term by integrating these areas, because we are compiling all the areas together, and organization will get to know about the scarce resources, how we are allocating these resources, how we are making decision, and about the society and how we are contributing towards the society. So we will put all these things together in integrated reporting. So integrated reporting enables investors and other stakeholders to understand how an organization is really performing, and hence it will enable them to assess organization long-term strategy. In some jurisdiction, integrated report is now primarily replacing the annual report. See, earlier we were just considering the annual reports, but yes, now with the help of integrated reporting, we don't have only the financial aspect, we have environmental aspect, we have social aspects also, and which is appraised by the other people of the organization as well as external people. Now, context of integrated reporting. Under integrated reporting, we provide details about the organization overview, which will gives us glimpse about the organization strategy, organization core values. Then external environment could be described, and that there is no standard format for integrated reporting, that depend upon organization to organization. But yes, these types of details are covered under integrated reporting, like six capitals are covered under integrated reporting. Now, what kind of opportunities does our organization could have? What kind of risk could prevail in our organization? Again, strategy and resource allocation. Again, business model could be covered. And what are our future prospects? Apart from that, we will cover details about our six capitals in integrated reporting. Now, six capitals of integrated reporting, and I have created a mnemonic during my times for integrated reporting, which is Shin FM. During that time period, a website Sheen was very famous, so I created mnemonic from that, and FM was a subject which I feel little bit uncomfortable for me. So yes, that's why I choose Shin FM at that time. You can choose any mnemonic, or you can learn it as the way it is. So first one is the financial capital. So financial capital is something which was earlier provided under the annual reports also. That means it covers the detail about the financial performance and position of the company, that include balance sheet, P&L, financial statement basically. And with focus on availability of sources of funds, equity and debt finances, like from where we are getting our funds. It could be equity, it could be debt, or it could be blend of both, and how we can use these resources under other capitals, just like the manufacture capital, just like the intellectual capital. So it will cover the detail about basically the financial structure of the company. Now, next is about the manufacture capital. Again, that was the part of our financial statement also, that includes the detail about the tangible assets, plants, machinery, infrastructure, fixed assets, inventory, that were covered in the financial statements. But In integrated reporting, we will provide the details about the manufacturer capital, linking that, yes, how we will be utilizing these resources to generate more value, generate more income. Now, intellectual capital, that is something which we can't see, but which we knew that that is gonna to give us benefit, basically intangible assets. So that could involve the research and development, and it's not only the capital we have, it could be the expenditure on these areas, just like how much expenditure we are gonna to incur in the upcoming future about the technical staff, about the skill staff and innovation. So yes, with that we will get an idea about, yes, these intellectual resources, because these resources were ignored. See, employees are the heartbeat of organization. According to me, if organization is not having skilled employees, organization can't survive in the long run, even though it has backup capital. Still, employees are important. So that's why we will get to know about the intellectual capital, how we are investing in them, how we are managing these resources. Again, next one is the human capital, that covers again the information about the knowledge, the skills, and the experience of the management and employees of the organization. So that could include the productivity, that could include the efficiency and staff turnover, details about the employees. Now, next one is the social capital, that covers the details about the, okay, this is the relationship between my key stakeholders. This is the relationship between my customers, government, communities, and how I will be investing in these resources, these stakeholders, and I how I am focusing on building the long term relationship with these stakeholders. So that could be the loyalty customer, and that could be via loyalty schemes or motivational employees. So how I am investing in motivating the employees by paying rewards, positive or negative could be the motivation, but yes, positive motivation is more encourageable. So, next is natural capital, that includes the availability of the natural and environmental resources to the organization in its operations. So, what kind of natural resources are being available to me, and how I am utilizing them, and how they are contributing in my business success. So, these all constitute part of the integrated reporting. See, it covers each and every information which any organization uh, can get benefit. That could be internal, that could be external. So if organization is providing details about the integrated reporting areas, stakeholders will get to know more about the organization, and that will encourage them to invest more in that company. Now, again, sharing some advantages of integrated reporting, because it's a voluntary disclosure. So again, that is gonna to increase the brand image and reputation for being honest, being transparent. And yes, we are focusing on six capital of organization, not only just one capital. We are not just concerned about the financial aspects. We are considered about the non-financial aspects. And in service industry, especially non-financial aspects are very important, and it will guide us that how my organization is creating value over a period of time, from short to long period. And if I am following the integrated reporting, and certain benefits could be same with the voluntary disclosure requirement you might have seen, so you can use your own wording, because usually they don't test advantages directly. They gives you a case study, and within that case study you will have to suggest maybe the manager, maybe the CEO, maybe the founder, that what could be the benefit if they adopt for integrated reporting approach. So these are the certain benefits of integrated reporting. So next is, apart from the integrated reporting area, there are certain other voluntary disclosure requirements which include the social footprint. That means we are assessing the impact my organization is creating on the people, my organization is creating on the society. So it could be positive, it could be negative. So the more the positive impact, the more brand image will be created, like how I am contributing towards the job opportunities offered to the society, and maybe I am creating some negative impact. So it's related to the people living in the society. They could be direct impact, there could be indirect implied impact. So that covers customer, covers employees, that covers the nearby people living in the society. So next is the environmental footprint. Under environmental footprint, we cover the details that how my organization is impacting the mother earth, the natural environment, and that could be positive again and negative. Like I'm utilizing the natural resources. So with me, there will be a depletion of scarce resource. That could be energy, that could be oil, that could be cutting down of trees. And maybe it could be positive that yes, I am disposing of the waste resources, I am recycling these resources. And again, there could be financial information with respect to the emission, pollution, and spillage. And again, we can take the previous year figures also, that yes, this figure has been reduced or increased as compared to the previous year. That will give a more structured presentation of your reporting, and the users can compare in a better way. Now, all environmental relating concerns could be prepared under the environmental reporting. So, environmental reporting being voluntary disclosure, we will be publishing the details of natural environment created by us, and it will cover the details about our policies and procedures which we are following in respect of environment and environmental related safety concern, and information regarding the company direct environmental impact. Maybe that could be our manufacturing technique, maybe it could be our distribution technique, or maybe there is some indirect direct environmental impact. That could be a forward supply chain or backward supply chain, like suppliers. Maybe our suppliers are uh, using such a techniques which are not safe for environment. So we have to provide all the details under environmental reporting with respect to our products, with respect to our company and our organization. So, the companies who are following the environmental reporting and environmental related concern, they have to undergo with the environmental audit. So, under environmental audit, we will sure that yes, the information of environmental report is true and fair, just like the normal audit. And yes, it will cover the impact which organization is creating on environment against the pre-decided standards. Maybe the standard settled rate is that yes, the hazard should not be more than 5%. So is it more or less than the 5% limit settled by the ISO 14001? So under environmental audit, we have three elements. First is about the agreeing what should be measured and how. That is a suitable metrics that could be based on the percentage basis or absolute measure basis, and measuring and verifying the actual performance against these agreed measures. So for a sample basis, we will be picking up a few things on the basis of the sampling. We will decide whether it is exceeding the limit or it's under the limit, and we will be reporting our findings, and if there is any deviation, any gap, then what are the reason and how we can improve that. Now, what are the advantages of environmental reports? Because being a voluntary disclosure, it will enhance the organization image, reputation for transparency. And again, it is providing about the organization commitment to the society, commitment to the environment. Stakeholders and shareholders will get deeper insight about the organization's social and environmental initiative, and it is going to strengthen the relationship with the wider stakeholder and society, because they will get deep insights about the organization considering the environmental related concern, and this is gonna to reduce the risk relating to the society and environmental related impacts. That could be legal compliance also. With environmental reporting, we can monitor our company's activity in a more better way, and that is going to give us a competitive edge over our competitors. Because if we are providing the details about every emission, every legal compliance and fines and regulators, then people will get to know more about us, and they will prefer our organization as compared to other organization, and we will be considered as an ethical organization in the eyes of the society. Now, next is sustainability, and guys, ACC is very focused about the sustainability related issues, and I recently attend a meeting with ACCA teams, and they have launched some sustainability related articles, and that will be covered very soon. And sustainability, and according to me, the focus of ACC on CVE paper from the paper-based paper has changed just because of the sustainability, green accounting related issues, because again, that is gonna to save a lot of trees, lot of papers. So sustainability means that the needs of present are met without compromising or impacting the needs of future generation. In simple words, our organization should have a positive impact on economy, society, and environment in the long run. So just imagine ACCA has switched from paper based to a computer based environment. Now, with that, what is the benefit? Again, we don't have to cut down the trees. We will be, attempting the paper on computer based screen, that is gonna to save the books also. Now, ACCA has also launched the study hub. So again, that is gonna to save the books publishing and paper publishing. You have to practice. Whenever you will be practicing, you will be practicing on a CBE practice platform. So thinking about the future, it's a huge impact on the environment in a positive manner. So next is about subcategorization of sustainability. Sustainability could be of economic sustainability. That means organization are able to grow and to maximize the shareholder wealth in the long run. The balance between the economic sustainability and environmental sustainability is quite delicate, as these contradict with each other, and most of the time economic sustainability gives more importance. That means we are considering the wealth of the organization, wealth of our shareholders, but in the long run, we are creating a balance between environmental and social sustainability and economic sustainability. So this is about the economic sustainability, because sometimes these features could contradict with each other if we are spending more on the environmental related concern or social related concern. That could create a negative impact in the short run, but in the long run, again, that is going to give us more benefit in terms of goodwill, and again in terms of number of customers. Social response sustainability, that means organization are able to improve their positive contribution on society in the long run, like society health, safety, all these things. Now, sustainability. Environmental sustainability means that yes, we are not taking resources more than required. So means the resources should not be taken for more taken from the natural environment or emission, and should not be made out to the natural environment at a rate greater than that which can be corrected or replenished. So elaborating it in a easy go manner, that हमें environment से resources उतने ही लेने हैं जितने required है, and जितने हम recycle कर सकते हैं. If we think that I am, doing the deforestation, my company is doing deforestation, and we can't grow more trees as the rate we are for deforesting them, then we should not do that. उतने ही पेड़ काटो जितने कि आप उसको दोबारा से लगा सकते हो. इवन दो आपको ज्यादा लगाने चाहिए, उतने ही ज्यादा ट्रीज ज्यादा प्लांट करने चाहिए. So yes, the impact on natural environment should not exceed the ability to replace the use the resources or clean up the emission. सो अगेन कि उसका इम्पैक्ट इतना नहीं होना चाहिए जो कि हम उसको ठीक ना कर पाए, उसका एमिशन कम ना कर पाए. नेक्स्ट इज अकाउंटिंग फॉर सस्टेनेबिलिटी. see, there are various reporting framework which are available for to help out the accounting for sustainability related issues. So first one is about EFCA, that is environmental full cost accounting. So under this, we cover all the cost, all the benefits to the environment, to the society, which our organization is providing. Now, next is triple bottom line sustainability framework. So it is the expansion of the traditional model, which where we were just covering the financial related concern, just like the integrated reporting. So it is the it expands our traditional financial accounting to include environmental and social performance as well. This reporting is encouraged by the international body called GRI. Now, there are different types of organization. First one is the commercial organization, which covers the profit related information. Next is non-for-profitable organization that covers the charitable or NGO related. Third one is the public sector organization. These organizations are funded by the government, state government, maybe central government, and their resources are not normally provided by the commercial organization. Just take the example of Indian Railway. Railway is only and only provided by the government. Railway service is owned by the government. So yes, their main purpose is to provide social welfare, and yes, we can't measure their output input in terms of the financial profitability criteria. We have to find out some different criteria to measure their performance. So again, for that purpose, we have certain measures which covers under the value for money criteria, which we will be covering very soon. Now these public sector organizations have to face with certain problems. Now, first one, multiple objective, like yes, see, government have the objective to save people from dying. That could be the economic condition, that could be the healthy and safe environment, that could be the with respect to the education also. So all these objectives are conflicting in nature. So that is another level of challenge. Now, next one is the difficulty in measuring of output. uh, how you can measure you are healthy? You can't measure that you are healthy. It could be some people think that it could be based on the weight. No, it's not based on the weight, but it's very difficult to interpret these types of outputs. Satisfaction, happiness, you can't measure the happiness level, you can't measure the see, according to certain people who are earning 1 lakh per month are poor, and again, there are certain people who are satisfied with the 40,000 salary. So again, it's very difficult and challenging for the government to measure these things. Democratic appointments. So again, these public sector organization and their delegates are appointed by the general public. Again, it's challenging. Financial constraint, because yes, although it's said that there is a financial constraint, although governments have funds, but the application could be, we can't challenge of, and they don't have a direct competition. So there will be difficulty with respect to benchmarking. See, one country's another company comparison would not be a wise comparison. Reason being, because the situation, the scenarios, economic scenarios, financial scenario, maybe environmental related scenario could be different. So it's not wise to compare them. And yes, non-profitable motive, these organizations don't have a profit-based motive. So for these organization, we have value for money framework. Basically, public sector organization use value for money to, check the performance, to demonstrate their performance. So it is important to demonstrate the value for money, as a public sector organization uses a public fund and taxpayer money, because the money used by these organization is not their own money. They use our money, so that is limited in supply, so they need to understand where their money is going. So that could be measured in the forms of 3 E's: economy, efficiency, and effectiveness. Economy means that is you measure the actual cost and time spent, that is more of the budgets related aspect. Efficiency related means that yes, input output basically ratio, that means your productivity, how you are utilizing your scarce resources with the given input related ratios. Effectiveness, that means how you are achieving your objectives, whether your objective have been achieved or not. So that is about 3 E's framework. So guys, this was all about the stakeholders, and see you in the next session with the next topic. And after all these topics, I will be covering few questions from each and every topic, and after that the final full-fledged question. Thank you.